Whether you are planning to study in India or abroad, this video will help you understand your options and make the right choice when it comes to financing your education. Hi everyone, I am Simran, co-founder at Epicred and your trusted guide through the education loan process. In today's video, we will be exploring the different types of education loans available to the students. We will also take a closer look at the differences between the Indian and the international lenders, as well as the pros and the cons of the secured versus unsecured loan. By the end of this video, you will have a clear understanding of how to choose the loan that suits your educational goals. So let's get started. First, let's talk about the different types of education loans based on where and what you plan to study. If you are studying within India, you will typically look at domestic education loans. These loans are specifically designed to cover the tuition fees, hostel accommodation, books, lab fees, and even extra expenses like the laptops and the project costs. For example, if you are pursuing a master's degree in engineering at IIT or any other college, a domestic education loan can help fund all these expenses. On the other hand, if you are planning to study abroad, you will need an international education loan. These loans are tailored to meet the financial needs of the students pursuing higher education in countries like USA, UK, Canada, Australia, or Germany. In addition to covering the tuition fees, international loans can also help with the living expenses, travel costs, visa fees, health insurance, and other miscellaneous expenses. And if you are looking to enhance your skills through the short-term courses or the certifications, you might want to explore the skill development loan. These loans are designed for the students enrolling in the vocational training or the short-term certification programs like digital marketing, coding boot camps, or the professional courses such as aviation training. Let's say you are enrolling in a 6-month data analytics course. This type of loan will cover the tuition fees for these specialized programs. Lastly, if you have already taken an education loan but feel that the terms are not favorable, you can opt for refinancing loan. Refinancing allows you to transfer your existing loan to a new lender offering better terms such as lower interest rates or more flexible repayment options. For instance, if you have an education loan with a 12% interest rate but find another lender offering the same loan at 9%, refinancing can help you save huge on your interest payments over the time. Now let's dive into the differences between the Indian lenders and the international lenders to help you decide which one works best for your situation. Indian lenders such as banks and NBFCs offer both the domestic and international education loans. For example, State Bank of India offers the SBI Global Advantage Scheme, which is specifically designed for the students pursuing higher education abroad. These loans usually come with competitive interest rates, but they do require collateral for larger loan amounts. HDFC Credila is another popular lender that specializes in education loans. They customize their loans based on your study plans and provide flexible repayment options. ICICI Bank also offers the education loans with minimal documentation and quick approvals, making them a go-to choice for many students. The main advantage of Indian lenders is that they offer lower interest rates compared to the international lenders, especially for the secured loans. They are also well versed with both the domestic and international education systems, making them a reliable option. Additionally, the loans from the Indian lenders qualify for tax benefits under Section 80E of the Income Tax Act, which can help you save huge on the interest payments during the repayment period. However, there are some disadvantages as well. While Indian lenders cover the tuition fees and some living expenses, they might not fully cover all the costs for the international students, such as the currency fluctuations or the comprehensive living expenses. The documentation process can also be lengthy and require multiple verifications, which might slow down the approval process. Whereas when it comes to the international lenders, platforms like Prodigy Finance, Empower Financing, they specialize in providing loans for the students studying abroad. They offer loans in the foreign currencies, which can be beneficial for covering the tuition fees and living expenses without worrying about the exchange rate fluctuation. The approval process is generally very fast and involves less paperwork compared to the Indian lenders. International lenders also provide full coverage for the tuition fees, accommodation, travel, and even health insurance. However, the downside is that the interest rates are often higher than those of the Indian lenders, making the overall repayment amount more expensive. Additionally, loans from international lenders do not qualify for Indian tax benefits. Next, let's discuss about the secured versus unsecured loans, which is one of the most important decisions you'll face when applying for an education loan. A secured loan requires you to pledge an asset such as property, fixed deposit, or insurance policies as collateral for the loan. These loan options are usually offered by the Indian lenders, and it's a great option if you need a larger loan amount. The key advantage of secured loans is that they come with significantly lower interest rates because the lender's risk is reduced by the collateral. You can also borrow larger amounts specifically for the international studies as the lender has the security of the pledged asset. Additionally, secured loans often come with a longer repayment tenures, which makes it easier to manage the loan after graduation. However, the main disadvantage of secured loans is that not everyone has the assets to pledge. And if you fail to repay the loan, the lender has a right to seize the collateral, which could put your assets at risk. Where on the other hand, unsecured loans do not require any collateral. These loans are based on your academic performance, future earning potential, and the financial standing of your co-applicant. Unsecured loans are often faster and simpler to process with less documentation involved. This makes them an ideal choice for students who do not have assets to pledge. However, the downside is that unsecured loans typically come with higher interest rates as a lender is taking on more risk. The loan amounts are also generally smaller, which might not be sufficient to cover all your expenses for studying abroad. At EpiCredit, we help you compare loans from both the Indian and international lenders and guide you through the process of choosing between secured and unsecured loans based on your unique needs and goals. We simplify everything from understanding the loan terms to ensuring that you get the best deal possible, that too at zero cost. So that's all for today. Thank you so much for watching the video. Don't forget to like, share and subscribe for more insights. If you have any questions, drop them in the comments below and reach out to us through the links in the description. I'll see you in the next video.